Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today we're doing another BananaRama where we take a look at Cramer's Mad Money Lightning Round stocks. We take a look at his analysis as well as some stock charting analysis and analyst comments, and then we pool those all together and try and generate some meaningful conclusions and feedback for educational purposes. It's been kind of a weird week around here. I hope you've had a good week. We were actually very close to the San Bernardino shootings. My wife has attended kid play dates across the street basically from where it happened. I work in the city that they lived in and staged the events from. So it's been a crazy week around here. A lot of police, a lot of helicopters, a lot of just talk and confusion. I mean, you hear it on the news happening in other locations and then it happens around you, and it just completely changes the dynamic for you. I think I had a coworker whose stepdad was actually in the room when it was happening. I asked how he escaped. He escaped unharmed. I asked how he escaped. He basically had a nervous breakdown and just walked out of the room. The shooters shot at him and missed, and he walked out of the building safe. Just really fortunate and lucky. Unfortunately, a lot of other people not as fortunate and lucky. Certainly thoughts and prayers with them as we, as a country, kind of deal with this tragedy and seemingly growing trend. I don't really know what's going on. So, on that note, obviously not a positive note, let's start the show and try and carry on a bit with our own lives. All right, our first stock of the day is Activision ATVI. I apologize for the show. I'm going to be low energy and kind of conversational. It's been a very strange week. I hope you understand that. But we're gonna do it. So Activision, Kramer is very positive about Activision, and he thinks that it's a good one and it's a good stock overall. Certainly analysts as well, with 12 holds and 17 buys and a target of about 41, 42. You may remember that we talked about this stock about 2 or 3 weeks ago, maybe. With that 42, I said we were in a parabolic trend, and that at that point you might want to consider, excuse me, putting on some stop losses because we were due to probably fall out of that parabolic trend. I took a bit of flack on Activision, actually. One gentleman came out really coming out against longer term charts of over 2 or 3 years on the weekly as viable analysis. Personally, I view Kramer's comments and analyst feedback as longer term, broad brush kind of comments. So you kind of have to use a chart that matches those comments when doing that analysis, particularly for this show format where it's generally more condensed. It doesn't mean that I don't like daily or hourly charts, even minute charts, certainly, but they have to be used to fit the need. I also don't like using more than probably a year and a half of data if I can avoid it. But in this case, showing the parabolic, the long-term parabolic of 2-3 years, I think is important. What I want to show you though is a little more of the details. So when defining a parabolic, you kind of start with that baseline at the bottom of the trend, and then when you get to the last point, you start defining the next line going up, and then once you end that point, then you do the next line. Once you hit the last point, you do the next line. When you're at 4, you're basically starting to get to the end of the parabolic trend. That's why I kind of think that 42 is going to be a nice kind of end point, at which point you're going to see some sort of retraction and falling out of that parabolic trend for a period of time. It doesn't necessarily change the trajectory of the stock long term. It just means there's going to be a short term pullback of an uncertain duration. Those durations will be defined by how it fares when it hits against this support line. And then if it breaks that, you know, what happens after that support line. Usually, if it's a very natural parabolic, then they kind of can ease into a nice cup and handle pattern where you have a nice pullback and then a resumption, weeks or months later. For this one, I think this is pretty well defined, so I'm not going to go into a daily. I would look at this point of just filling in this upper triangle of how we're doing this wedge. Sorry, I did that wrong. Of how we're doing this growing wedge pattern and say like, well, yeah, 41, 42, it's going to have to fall out of there eventually. So I at that point, I'd put some stop losses on and just be cautious. That would be my recommendation. Kroger KR. Kramer says Kroger is exactly what most companies want to be. It's the top supermarket with the best margins and the best customers, and I think it's terrific. I want to own Kroger. Analysts seem to have a bit of a different perspective, at least currently. 7 sells, 10 holds, and only 1 buy. But the most recent was a buy in the sort of 42 region. If we look at the chart, we see this nice explosion out of a symmetrical triangle pattern here in the last week. So we're really plowing up now at 40.55. Certainly, I think Kroger has a lot of positive feelings about it. So looking at this chart, you can really see that, although the volume wasn't crazy when doing this increase. So right now, you would look for, if you were interested in buying it, a bit of a pullback to pick it up. So let's look at the daily. We see the explosion as well, but we can also see that we're starting to enter overbought territory. So we have a high RSI, but we also have a stochastic that is over and looking to turn back as well. CCI that's coming down after being high, which is generally an overbought signal, as well as a rising money flow index, but not into totally overbought territory. So I would look for a bit of a retraction if you're interested in Kroger. Certainly, I would think that it would at least need to bounce off of this lower support line here before it would resume any sort of positive momentum afterwards. So what you would be looking for is for it to come off of that boundary with some volume that would indicate that the breakout was a true breakout. Morgan KMI. Kramer says Dan Dicker was doing stuff in a video at the street saying this is a buy. Carlton English, who is basically a reporter and does nothing but KMI stories, said there's enough reason to worry about the stock. Kramer says if Rich Kinder, the CEO, came on, we could probably have a better shot. But read her stuff because you'll understand the worry about the dividend. Carlton English, on behalf of Carlton English. The analysts have 6 holdings, 18 buys, but I don't think that's fully representative at this point because a lot of the recent analyst work that I saw was lowering targets, so down to 21.29. If I look at the chart here, certainly I feel unfortunate that I can't provide better news to anyone who owns Kinder Morgan and is looking for some sort of secret sauce or magic in this video to say like everything's going to be okay, because from a charting perspective, we're just looking at trends, mostly people's emotions. That's what you see in the charts themselves. So what we see is an emotion of panic and fear in this stock, certainly. So we're plunging down. This is a daily chart, just looking at the last year about doing sort of that parabolic, but in the reverse. So we're going down kind of into this third one. I would expect at least a rebound into the 18 region. So if you just want to get out, it's an opportunity. We're also showing a lot of oversold signals in the stochastics. Probably a few more days to go, at least of down. But if you're looking to catch a knife and try and make a short-term profit, this might be an opportunity to do so. But certainly not a lot of good in Kinder Morgan. MBLY, MBLY. Kramer says, I think MBLY is one of those expensive stocks that is not going to hold up in this environment. Somewhat like Umbrella, it's just too hard right now. We've got to go with tried and true. This is counter to analyst ratings, which are 4 hold and 12 buy. And the most recent have been buys leaning towards the 62-68 region. If I look at the chart, though, I don't say, certainly if that's headed towards 62-68, that's got a long way to go and it's not going to come soon. We're in a large descending triangle here. Those tend to break in a negative fashion and actually head downwards. So barring some sort of event for MBLY that kind of provides a push through that boundary, I would be very concerned and cautious about MBLY. On the positive side, it needs to break through this resistance line at around 45.5, but you really need to keep an eye on that support level down here. Certainly if it held it for an extended period of time below, then you would basically break on through and be headed into a new bearish trend. Nike, NKE, Kramer says, I think if you should wait if you want to buy more, but don't trade around it. It's a really good stock. Analysts tend to agree with 3 holds and 28 buy ratings most recently. We have a buy rating in the 139 to 145 region. If I look at the weekly chart, I see a very nice parabolic trend, which we talked about with Activision. Not quite the same as Activision, but it is starting to head towards the top end of its parabolic pattern on the weekly, which I think is important to note. It's not something you want to shy away from. It's just something you want to recognize as something that can be detrimental in the future, at least in the short term. So looking at that 135 plus region, we're starting to head into that region. If we look on the daily, we can see this rising wedge pattern that is occurring. So presumably it's going to at least rise and touch this upper boundary one more time or a couple more times. But this is the line that you want to be concerned about. If it certainly breaks through there, then we're going to be headed a little south on that parabolic trend and have a stabilization period. Certainly something to keep an eye out. If you've got a lot of profit off of Nike and you want to move that money somewhere else, certainly not going to fault you for it. Tesla, TSLA. Kramer says, Tesla Motors is a cult stock, so therefore it defies the four walls of the spreadsheet and is certainly beyond my candid mind thinking. If you like the car and want to own the stock, that's fine. Be careful, Audi has a 2017 electric that people say are good. Analysts are all over the map with 5, 8, and 11 for sell, buy, and hold. Buying in the 385 region for the top end as a price target. Looking at the pattern though, we basically have sort of a long-term stagnation where we're oscillating between this channel. Really, we would need to break out of this channel in some sort of meaningful way to get a meaningful pattern, but it is a wide range. So if you like just trading within a stock, then this is something that you might want to look at because there's generally a lot of movement, there's a lot of volume, and right now we're going to be steady in that range because it has such a core user base and proponent base that even when bad news happens, it rebounds fairly quickly. In the short term, we're certainly going to bounce between this resistance line at about 235 and the one on the lower end, the support line at about 205, and then we'd need some sort of event to really move us out of that because certainly those branches are still fairly wide, and this is a weekly chart which indicates that it's going to last for some time. So yeah, if I was playing with Tesla, I would just be playing probably the ranges for now because it doesn't offer a dividend, but it does offer a nice range volume movement. All right, that's my show for today. I hope you enjoyed it. If you enjoyed the show and the channel overall, I appreciate if you could subscribe to my YouTube channel. It means a lot, and it also helps move the channel forward, which is much appreciated. I hope you have a good week and happy holidays.